Hello, my name is Bayon and welcome to how to capture 1000 pip moves in the Forex market in 5 minutes per day. In this video, I'm going to show you the one thing that you need to know in order to capture large pip movements in the market. Now, the typical method that's taught to the mainstream Forex public goes completely against this. The typical method gives you a grand Forex trading myth. And that myth involves thinking that in order to make money in the market, you have to capture small pip movements or scalping. You have to spend hours and hours in front of the screen every day to trade, and it is very risky. That's a typical trading method. Now, what I'm advocating is the one thing you need to do to capture larger pip movements in the market, because the Forex market gives you these large opportunities on a consistent basis. For example, what am I speaking about? This is the British pound moving 1500 pips. And if you note, 1500 pips is $15,000 if you are a standard lot trader. This is the US dollar, Canadian dollar, another 1500 pips. The way how the US dollar, USD, Canadian dollar works is that 1500 pips is about $13,000 movement in the market. This is the USD Japanese yen, 5,000 pip move, and that's just under $40,000 for a standard lot trader. Note, for a standard lot trader. So these movements happen all the time in the market. You just have to know how to capture them and what to look for. And the one thing that you need to do to capture these large movements is a strategic trading system. And this is one of the things that most traders and investors lack. Now, what is a strategic trading system? A strategic trading system sets out rules for you, specific rules of when to identify market opportunities, when to enter the market, how to enter the market, specific rules of how to manage your risk in the trade, and rules of when to take profits. Each investor and each trader needs to have these rules in order to successfully trade the market. Now, let's look on a simple rule. For example, I may say to you, identify the red letter. Notice how you can immediately spot that C is the red letter in this presentation, and your brain is already pre-programmed to know what a red letter looks like. And that's what we want to get to you in your trading, how to identify these rules so you could know, okay, this is an entry, this exactly is when you take profits, this is how you manage your risk. Now let's talk about a rule that happens in the Forex market all the time, and this rule is fairly simple, but it can be very profitable and very beneficial to you in the market. Now, what this rule did, it allowed for 1,000 pip move in the Forex market. And folks, this happens all the time in the markets. This is not a one-off incident. If you look at a chart or charts of the Forex market, you will see these same patterns play out time in and time out. Now, the specific rule I'm speaking about is what I call a double top. Now, a double top scenario is when you have a top in a market and you look for the market to find resistance at that level. And resistance simply means, or resistance can be looked at like a wall. The market will come up to a level and hit our ceiling, and the market rejects that level. So that is what resistance is. So we have a chart here of the British pound, and we are looking for the double top scenario. Remember, this is a specific rule in the Forex market. The rule is that we look for tops in the markets, and we look for the market to confirm that the market is being rejected. So once a market hits the wall, we want to, and this red line is our figurative wall here, we want the market to come back down and confirm it via candlestick pattern. So looking on this market, we see that the market didn't hit the wall as yet, so we wouldn't enter. The market came up. This is when the market hit the wall, which is our resistance level, and this is why it's called a double top, because this will be top one, and then we're looking now for top two. And the market came up, hit the wall, got rejected, and this is our entry point. This is our entry candle at 1.42, and then as you can see, the market came down, went down 133, 132, and down to 131, 130, and this was over a 1200 pip move in the market. So as you can see, this was a 1200 pip move in the market, or for a standard lot, for those who trade a standard lot in the Forex market, that's $12,000, and that is a simple pattern that we have in the markets, and a simple method that happens all the time in the market. Now, if you want a detailed breakdown of the system that we use to capture these large trends, you can go to daleforex.com. That's daleforex.com, and I will lay it out in greater detail, the actual system that we use to capture large movements in the market, for example. And you'll see how you're able to put together a plan to capture these large movements in the market. Like, for example, this Japanese yen that we spoke about, this was about a $40,000 move in the Japanese yen, 5,000 pip moves. And these moves happen on a consistent basis with the Forex market. So that's daleforex.com. That's daleforex.com. And I'll lay it out in great detail, the system as how you use the system, and the step-by-step way to capture these large pip movements in the market. And I can assure you, this is definitely different from what you will see out there, the regular teaching practices of the Forex folks. So daleforex.com. Thank you very much for listening to this presentation. Thank you.